Hello, good afternoon. You're watching Closing Trades on ET now. Well, we were hoping that we'll see the mark of 25,000 on the index today, but no, that wasn't the case. In fact, we have moved further away from that mark. Right now, Nifty is in the red, below the mark of 24,850. Having said that, the broader market continues to power ahead quite nicely. So there's not a big letdown as such from the broader markets. And Nifty Bank too is holding with a gain of almost 200 points. Of course, the big gain on Nifty Bank is partly on account of the kind of move that we have seen on PSU banks. India Wix has also actually spiked quite a bit, and that's the reason perhaps a bit of a nervousness is coming back. We'll play that India Wix for you right now. It's up almost 6%. PSU banks, as I was talking about, is the best sectoral gainer. So you have PNB, which is up over 4-5% on account of good earnings that it reported. Bank of Baroda is doing quite well, and Bank of India too should come up for you on the screen. All of these stocks in focus. Some of the other gainers include names like Bandhan Bank, which is up a solid 10% right now. IEX is also moving on decent amount of volumes, and DLF2 is one of those candidates. FMCG and IT, however, are a big drag on the index right now. So apart from a couple of these pockets, Aisha, it's not looking too bad a screen, even though the frontline index is off the highs by a whole lot.
Yeah, but disappointing considering we were just a whisker away from that 25,000 mark on the index. But anyway, Bandhan Bank, of course, is your big mover today. We will try and play the sound bites of the management as well and what they actually told us. In a weaker quarter, they've managed to deliver numbers which are ahead of the street estimates. So the street is now wondering what's going to happen in the stronger traditionally quarters and whether or not they'll manage to post a beat there as well. So almost a 13% notch up. Anisha was just flagging off some of the PSBs, this PNB as well. We're going to be chatting with the management shortly. That stock on a tear, 6% higher, and then CUB as well, which is higher by about almost 6%. In fact, let's start with these banking numbers. Let's hear out first what Bandhan Bank had to say about their growth targets going forward.
The levers are simple and basic in nature. Our ability to grow our advances quarter on quarter has been established in the last year. In quarter one, it generally is a muted quarter for us, and we generally degrow. What we have been able to establish this year, first quarter, is that we've been able to deliver a stable growth, and that's something which is important. Going forward, quarter two will be better than quarter one, and quarter 3 and 4 are definitely our best quarter in terms of advances. So that will continue. That clearly is going to happen. Our focused attempt on improving portfolio quality over the last 2 years, and very specifically April 23 onwards, some of the specific initiatives that we took are holding up extremely well. And therefore, whatever disbursement we did in FY 23-24, the slippages are extremely low, almost 5-fold improvement over previous quarters. So therefore, going forward, you should continue to see that improving. Third, I think this quarter specifically, we've been able to contain our OPEX, but that's an area we will continue to make investment in people, product, technology, but we will remain watchful on that area.
Okay, so that's a word coming in from the management of Bandhan Bank. But since we are on the subject of banks, let's continue with that. Mr. Atul Kumar from PNB Bank is joining us. He's the MD and CEO there, Atul Kumar Goyal, that is. Hi, sir. Good to be speaking with you. Thanks so much for making time and speaking with us. Well, first thing I wanted to begin by discussing the growth in assets that we have seen, because advances I see has grown 12%, and within that MSME and corporates grew in single digit on a YY basis. Is it a conscious decision that you're slowing down your corporate and MSME book a bit, or are you anticipating some stress there?
Focus area of the Punjab National Bank is concerned. Last time also told, this time also reiterating, that is the RAM, retail, agri as the MSME. As on date, if you see the percentage of the RAM to the total credit is around 55.46, which has improved from the last quarter of the 55.16%. Then we want to increase this number to 60% in times to come in the 2 to 3 years. And for this current financial year, we are thinking around to 56%. So this is the reason for the focus area for the Punjab National Bank. But we are the largest bank of the country. And we are also involved in the corporate financing also, even as on date, around 1 trillion loan is under various stage of the discussion, disbursement, sanction, etc. also. And then there is a good demand from the 3-4 sector from the corporate side. That is a cement, that is a steel industry, and there is a very good demand in the road. So we nothing mean ki although we are giving the focus on the RAM, but we are also in the other area of the financing also.
Right. So just wanted to understand in terms of advances, do you think that they can reach the annual guidance? Because your quarterly growth tells a very different story despite having a tough first quarter.
As far as our guidance for the credit is concerned, we have given the guidance 11 to 12%. Although we have achieved 12.20% in the first quarter, but we will maintain our guidance which we have given earlier also.
Right. So on the deposit side, the first quarterly numbers are usually weak. Your CASA percentage is now 40%. You've guided this to be around 42. What's your strategies to support this kind of growth?
As far as CASA is concerned, no doubt it is 40%, but we have set a target of the 42%. And we have changed our customer acquisition. Then we are providing good customer service, and we are targeting the corporate customer salary account. We are targeting the state government SNA account and also the defense sectors also. And one more thing also, we have provided tab to all the branches, all 10,000 branches have been provided tab. So customer acquisition for the saving account, which earlier we were taking the more time, now very same day we are opening the account. So this is definitely giving the yield to the bank. One more thing I would like to tell, last year we have opened more than 1 crore saving bank account. And the first quarter of the current financial year, we have opened more than 27 lakh account. So money will flow in this account also. And in addition to that, current account also. Last year, we have opened 2.68 lakhs. In the current quarter of the current financial year, more than around 50,000 account we have opened. So this will definitely help to increase the CASA percentage.
So there's a definite roadmap for CASA to be 42%, but I wanted to shift focus and talk about slippages and recovery. Now, slippages, of course, came down quite meaningfully, but recoveries came down too. Was it just a one-quarter impact, and you expect recoveries to pick up from here on?
We are fully confident for achieving the target of around 18,000 crore rupees we have targeted. If you see the last 2 years also, 21-22, we have recovered around 29,000 crore rupees. 23-24 we have achieved around more than 22,000 crore rupees. So this is a very reasonable target. Although first quarter, on account of this election duty of the employee of our various branches and the transfer posting, this was the reason. And we are hopeful whatever the gap in the first quarter, we will make up the gap in the current quarter itself. And this 18,000 crore number which we have targeted, we are fully confident we will achieve this number.
Okay, point taken. So that's about the recoveries, and you're quite confident about that. But you've also scaled down your credit costs as well as GNPA guidance as well. What gives you the confidence there?
There is 2-3 factors for revising these guidelines. First, we have given the guidance that our gross NPA will be 5% by the March 25. Since we have already achieved 4.98% in the first quarter itself, so we are revising this guidance less than 4% by the end of the March 25. Reason behind that for this revising in the guidance, because if you see every quarter, recovery is around double of the slippage also. Last year also, if you see, it was more than 2.5 times of the slippage. And first quarter itself, our slippage was the 1,750, which was the least in the last 12 quarters. And recovery was more than 3,200. So this is the one of the reason for revising this. As far as credit cost is concerned, our PCR is already around 96%. 96%, so there will be a very less requirement for the aging requirement. And if you see the first quarter, the credit cost was only 0.33%. And we have given the guidance that our credit cost will be the 1% for the current financial year, and we are revising it for the 0.50% because there will not be much requirement for the aging, and as I told you, the recovery is the double of the slippage. Even I am seeing the scenario, there should be a reversal of the credit cost also, but whatever the guidance I am giving 0.50%, it is on very conservative side.
Okay, and with regards to the draft circular presented by the RBI, what's your opinion? Have you got a chance to evaluate the kind of impact that would have on your bank?
We have made the calculation also. If you see, the current LCR is 125%. Whatever the revised guidelines for increase the runoff rate for the depositor using the mobile and the internet banking, we are having the around 1 trillion depositor out of the total 14 trillion deposit base, and we have around 10% basis. 10% will be the dip, which will be around 115%.
Right, and do you see any incremental stress when it comes to MSME? Because we've been hearing some of this from your peers.
I think we are not seeing very high slippage in the MSME. I will give two data, bank as a whole and as well as for the MSME sector. How we have done for the improve the underwriting standard, what State Bank has taken for the collection efficiency. This data we are monitoring every month. So I will give you the data from the 1st of the July 22, 30th June 2024. So it is a 4-year data, 48-month data it is having. So around more than 8.32 trillion we have sanctioned bank as a whole in the last 4 years, out of which more than 7.49 trillion we have disbursed, and outstanding in this account is around 6 trillion. And if we see the delinquency, the NPA in this account is hardly 2,276, which is coming around 0.30% of the total new underwriting of the last 4 years. I will give you the segment wise also. The 0.27 in the retail and 0.52 in the agriculture. The MSME, which is your specific question, in last 4 years we have sanctioned around 90,000 crore rupees, out of which we have disbursed 83,000 crore rupees, and outstanding of the MSME new underwriting is the 57,000. Out of this, the NPA is only 1,280, which is coming around 1.54%. So, in my opinion, 1.5% is a reasonable number as far as the MSME is concerned, because sometimes they are not getting the payment timely. There is a other issue also, how to market their product. So, this number, I think it is very reasonable number. So, I do not foresee any much slippage in the MSME sector also.
Okay, so on that note, we let you go. Thanks, Mr. Goel, for making time and speaking with ET Now. Look at that stock up almost 67%. So the company is not only confident about recoveries going forward, they're very confident about asset quality, and that's why they've brought down their GNP guidance. Credit cost is also under control. So clearly that stock doing quite well. Time now for a quick break. On the other side, Mr. Pramod Guppi will join us to talk to us about the fundamentals of the market. Don't go anywhere.
Back with closing trades right here on ET Now. Definitely given up all of our morning gains, considering we were just a whisker away from that 25k mark. Again, attempting a recovery. But let's see what really transpires in the last half an hour. Volatility surely has picked up. Pramod Guppi as well joins in on the show right now. Pramod, hi, afternoon. Amidst all the chatter about high valuations, what is it that you're making of the market right now? Put money, fresh money to work at these levels? Yes or no?
Well, the overall market obviously seems on the higher side in terms of valuations, particularly given the sort of earnings that we're getting. But, markets are markets. There are always pockets available to deploy capital. There are pockets which are available at reasonable valuations, or if they're fairly valued, there is enough predictability in terms of earnings growth. So that's what a discerning investor should do. But we have to work with the constraints that the market has provided with us.
Pramod, curious to know, what is it that you're making of some of the private banking names and the kind of earnings that have come out so far, right? While ICICI Bank may have been impressive, there's no consistency throughout the space, especially from the big ones. As an investor, how would you approach private banks now?
I think the private banks are still one of the few pockets of value that I was talking about. Yes, there are issues in terms of margins. Deposits are coming at higher costs. To that extent, margins are under pressure. Incrementally, as we proceed through the economic cycle, you will see asset quality deteriorate as well. So both of these will put pressure on earnings growth, but nothing that the market is already not factoring in, given where valuations are. To that extent, if you juxtapose those expectations alongside current valuations, I think they're not that disappointing. Yes, there are different levels of performance across different banks, but at the same time, there are different levels of valuations and expectations of the market. So I would reckon private sector banks still remain one of those few pockets of value that I was talking about.
So point taken, that's the view coming in as far as the private banking names are concerned. But today, of course, it's the PSU banking pack, which is fairly active. And there's a bit of a comeback which has been made by some of the other PSUs as well. You know, your Real Vikas Nigam and Mazgaon Dock of the world as well. But wanted to get a sense from you, Pramod, what's the view on autos right now? I know you guys have stayed away from autos, but is it time that you're looking at it incrementally positively, or at least in the supply chain somewhere?
Yeah, no, it's not like we've stayed away from autos. We do have some exposure both at the OEM level as well as the ancillary level. No, I think we are in a reasonable stage of the economic cycle as far as demand is concerned. And also, given the commodity prices are easing, margin pressures and earnings growth are also on a decent footing. But like I said, market as a whole hasn't left much value on the table. Which is why you need to be a little more discerning in terms of looking at businesses where there is predictability of earnings, both in terms of demand drivers as well as margin expansion drivers. I mean, it's very hard to see a cheap automobile stock, but even if it's fairly valued, you need to give yourself the comfort that the earnings growth is as a high confidence interval in terms of panning out over the next 2 to 3 years. But yeah, I mean, it's not like we have stayed away from autos. We have a very close eye on many of the auto companies.
Right. Pramod, in terms of a trigger for the market, do you think it all boils down to earnings, or there are any other triggers or cues that you're looking out for the market to move whichever way?
Well, we are bottom-up investors. To that extent, we stayed glued to earnings potentials, changes at the economy level, which could change the growth trajectory for some of the sectors and companies of our interest. However, triggers for the market could come from anywhere, right? So it is a global situation now that foreign institutional investors are coming back. They can become influential in the market, and to that extent, we are exposed to what happens globally as well, including potential rate cuts in the US, geopolitical tensions we've all been talking about for a while now. But at the fundamental level, I think now that the budget is out of the way, you have some sense of political stability and direction coming back. It comes down to earnings, and earnings is something that somebody like us focused on bottom-up fundamentals would reckon are triggers for individual stocks and sectors as well.
Let me get you in as well on the conversation, because we've seen a bit of a cool off in the market after just getting close to that 25,000 mark for the Nifty. What's that really telling you? I mean, is it just a matter of time, or do you see that level as a big hurdle?
No, it's not a big hurdle. Maybe today's date is not the best date for 25,000 auspicious date. Yeah. So I think we can just make away with that. But I think it's a phenomenal market, and even after the last week week volatility for the indices, where we were at one point on the verge of breaking below the 24,000 mark, and from there the markets have made a very strong comeback. So I think it's a matter of time that we break past about this 25,000 mark. The only thing which has changed positively for the markets this time around is not just the market breadth improving, many sectors participating, underperforming sector stocks making a comeback, but this time around the global markets have also managed to show some good bounce back, especially after Friday's move. So I would believe that if we see maybe another couple of days of follow-through up move from the global markets, we should be easily comfortably cruising past about the 25K mark.
Yeah, we're waiting for that 25K mark. But just Pramod, last word before we let you go. What's the view on chemicals now? Because a lot of these companies have started showing, signs of bounce back, but that's been the case for the last couple of quarters as well. Would you want to make a fresh bet within the chemicals agro basket at all?
Yeah, again, I don't think you can paint everything with the same brush here because some of these sectors or chemicals are exposed to global supply chain, in which case China becomes a big factor. Given we've seen the impact on prices of several commodity chemicals after zero COVID policy was lifted in China and Chinese chemical industry entering the global supply chain. To some extent, there were signs over the last couple of quarters that that sort of dumping pressure has eased, but it remains the key variable here because the local Chinese economy isn't doing well as much as we understand. To that extent, scope for further dumping or pricing pressure on some of these chemicals will be the biggest variable to watch out for. Having said that, there's always pockets within specialty chemicals where there are defensible companies whose products are differentiated or at least they're cost competitive. To that extent, there are moats to be protected on earnings. Plus, we have the structural driver. There are clearly global buyers who are looking to diversify their sourcing, looking at some of the Indian chemical companies and an alternative sourcing avenue for them. To that extent, structurally, I think there are companies and subsectors which are very strongly positioned. But the bigger variable for the sector as a whole remains the pricing pressure coming from Chinese companies.
Pramod, good to have you on the show. We'll let you go on that note. Let's just revisit what the market is looking like. We've, flattened out since then. Wonderla Holidays, of course, a very disappointing set of numbers. BPCL still holding out, L&T looking good, and yes, it's the PSU banks which as a cluster are the outperforming basket today. Quick break. When we come back, lots more on the other side.
Welcome back. Well, let's welcome on board the management of Strides Pharma now. Mr. Arun Kumar, the executive chairperson, is with us. Hi, Arun. Good to be speaking with you. It's a good set that you have reported, largely in line with your expectation of 12 to 15% growth. You've actually bettered that with a 17% growth in the quarter, with the US revenues coming in at a historic high of $70 million. Talk to me about the US business a bit more. Do you expect this momentum to sustain? And how's Suprep really doing for you in terms of market share right now?
Yeah, thanks. Good afternoon. Thanks for having us. Anisha, yeah, we are significantly ahead of our outlooks and quite pleased with our Q1 results. The US numbers have significantly benefited from Suprep launch. We now have a little over 30% of the market share, and we expect to continue holding on to a nice product launch that we have had. Of course, we have a new approval of sucralfate, which will be launched next quarter. So consequently, we are now comfortably poised to be in the mid-range of the $285 to $300 million US revenues, if not at the higher end. So it has been a good set of numbers across markets and segments.
A bit more about the sucralfate oral suspension drug that you talked about, that you've got the approval. What will be the launch timeline? What kind of market are you looking at tapping there? What could be the market share perhaps?
Well, typically we end up between 25 to 30% of market share on any key product that we launch. It takes us a good 2 to 3 quarters to get there. So I can't put a specific number, but it could be another important product for us in the near term.
The other thing I wanted to talk about, Arun, was OneSource. Last we know is that one of your partners was expecting approvals on this. Could you share any timeline? When is it that you're expecting commercialization?
Asha, hi. We've actually guided in our deck today that we expect commercial sales of our first GLP in this financial year. Commercial sales from OneSource is already commenced for other products, but for the GLP, which is a big leg up for us in terms of opportunity, will potentially happen in H2. our partners' approvals are on track.
Talking about the US business, I just want a bit more color about how the price erosion situation is on the ground. Is it still very acute or is it abated a bit?
Well, I constantly use every opportunity to say that our portfolio is slightly different. We have had very significant and consistent margin profile in the US. Remember, we have little over 250 products. We have a very calibrated approach, and consequently, only 67 products are currently in the market, which allows us to ensure that our products take care of price challenges. We have not seen price pressures for almost 90% of our portfolio for many, many quarters, and it's been consistent. And if our margin growth has been consistently adding Q on Q, it's simply because we are able to maintain our pricing in the US.
Correct me if I'm wrong, but I do understand that you have been divesting some of your non-core assets, whether it was OSD facility in Singapore or your deal with Syngene with respect to Stelis as well. How's that aiding the overall return ratios? How will the going away of the Stelis business, for instance, help your overall scheme of things?
Well, so the OSD business is related to strides, and that obviously everything that we set out when we came back to run the business in terms of network optimization has been complete. That obviously is resulting in better OPEX leverage, lower costs, and improved margins. Specifically to the site that you're referring to on the sale to Syngene, it's not related to strides. It's a one-source site, which is a new CDMO business that's been carved out and should be listed later in the year. That was a vaccine site that we set up for Sputnik, and with whatever happened with Sputnik, and then finally we did sell that facility to Syngene. And that also aids, obviously, OneSource's ability to have much better returns. So you're right, both the companies or both the divisions are benefiting from those actions that we've taken. All of those corporate actions that we announced are now completely behind us. And this is a time for us to be focusing on continued growth from where we are now.
Continued growth, are you looking at, let's say, 15 to 20% growth from here on for the next few years with margin profile of 20-22%, or what the medium-term output would really look like for you?
Well, I think we're fairly reasonably on spot with our guidance. So this year, we have guided for a 15% growth, and Anisha, as you correctly said, we are a little ahead of it this quarter, but that's also because we had a nice Suprep launch. So I would still stick to that 15% outlook, but 20 to 20% EBITDA is definitely on track, which is what we would be more aiming towards the higher end of the range. We are pleasantly surprised by the fact that we've been able to achieve that as early as Q1. So that's a bonus. So maintaining that and growing from that level should be reasonable, I would assume. And so at 1 year at a time, especially when we're coming back after a very significant course correction that is now fully in play and the past is behind us.
Right. Great to have you on the show, Arun. Thank you so much for making the time out and speaking with us today.
Thank you. Thank you, Aisha and Anisha. Thank you. Have a great day.
You too. Okay, just taking stock of what the market is up to now, flattened out completely, had a touch and go moment with that, actually not touch, just about touch with that 25,000 mark, petered down a little bit from there. Banks, they are your key story, but today it's the PSBs which are taking leadership. L&T, Divi's, BPCL, M&M, they're also seeing some sporadic moves. Vishal Malkan joins in on the show. We have Deepak Shenoy as well joining in. Vishal, hi, afternoon. Any stocks that are looking good to trade right now? Anything that you may have spotted?
Yes, good afternoon. I think we just got shy of 25,000, which looks like a psychological number and some kind of selling pressure, but not in a big way. So the best part is even the banking sector, which was behind, has been in the limelight today, especially the PSU banks. The stock-specific movement, which I'm tracking today, A couple of stocks. One is IEX, which has broken out that resistance about 185. And I look for a good swing trade here for next few days up to a target of 210 to 215 in that specific stock. And the second one would be IOC, which again has broken about that levels of 178 on closing basis. So again, a target of 200 is not too far.
Banking names, Vishala, Bandhan Bank, which has managed to gain further ground, actually 14% right now. PNB is doing quite well, and a lot of other banking names like a City Union Bank, etc. Any top bets within banking?
So I'd like to go with Federal Bank as my top pick, which has again been hovering around that 200 mark, which is, I think, a good psychological number. From here, we can look at target of 230 to 240 in the next few trading weeks, and with a strict stop loss of 192.
Okay, point taken. So that's the top bet right now within the banking universe. What else is happening in the market in the last 15-20 minutes? Well, it is names like Godrej Consumers, which has managed to perk up a bit. Ircon International is the other one. And Finolex Industries is also gaining ground. There were flashes running for you at the bottom of the screen as to how Jeffries has actually increased the target price on that one. It stands at 380 rupees a piece. We were speaking with the management earlier who talked about how they are completely rejigging their portfolio in terms of being only an agri-focused company to expanding their other, diversifying their business as well. And they were talking about an improvement from here on. But we also have Deepak Shenoy joining us on the show right now. Deepak, hi, good to be speaking with you. What do you make of the market mood right now? Because there are people who are waiting for dips to come by. They're calling the markets a bit more frothy, expensive, difficult to find ideas. But the liquidity gush really continues and the market continues to trend higher.
Thanks, Anisha. Indeed, in fact, I think people who've been waiting from pre-election times for the market to dip, they got one. They thought it'll be another bit of a dip after that, and then the market went up. Last week we saw it's less than a week now, and we've seen capital gains tax increase, and still the market seems strong. So today, I think the Nifty is kind of lackluster. If you look at the broad market, it's up more than 1% overall. So I think there's a lot of buying pressure in this market. Perhaps the fundamentals, you could argue, have been frothy for over 6 months now, but the market continues to have run higher. But I don't see the fundamentals too bad in at least the Nifty and in the mid caps, because we've seen earnings growth kind of come back to meet whatever price growth has been there for the last 5 years in both the Nifty and in the mid caps. In the small caps, there's a bit of a run up more in prices than there has been in earnings, but the earnings have also grown significantly, more than 3 times in the last 5 years. So may not necessarily be too much in terms of frothiness. We're actually looking at results and saying, okay, some part of the early part of the results were a little disappointing, especially in banking, but we're seeing good results come in from the manufacturing companies so far.
And Deepak, looking at manufacturing, do you think the valuations are justified? And I mean, do the stocks have further headroom to go from these levels?
Aisha, that is unfortunately something we can't predict. But the numbers actually look so crazy. We're looking at some numbers today that came out, which were earnings have doubled, or in Friday also. In some of our companies, earnings have doubled. So if you double earnings, you can pay a considerably high PE for a company that has the ability to grow earnings at those rates for a longer term period of time, simply because the landscape under those companies has magnified quite magnificently. I think also if you look at some of the earnings where the earnings growth has been 50 or 60%, in fact even good compared to even the previous quarter, because usually the last quarter in a manufacturing setup tends to be one of the most heaviest in terms of revenues and profits. You're not seeing that much of a drop coming in Q1 as well. I think that is also another important factor that seems to be playing out. It'll still take time. Remember, most of these government-based, order-based companies would have seen a slowdown in the election quarter. And the orders will then bunch up towards the rest of the year, because the government has to spend what it has to in the remaining 9 months. So I think that way there are better things ahead. I will say, you can't bet sell based purely on valuation. Most of the time, markets will surprise you on the upside.
Surprising. In the meantime, just wanted to flag out some of the railway stocks which are buzzing. Take a look at RVNL up 10%. IRCON is doing quite well with that 9% gain. You also have IRFC which is up a solid 7%. And the other pocket that deserves mention is a few of these chemical stocks. So you have a Deepak Nitrite, a Deepak Fertilizer which is up 7%. Sumitomo Chemical is doing quite well in the trading session as well. So a lot of these big buzzers today. But quickly, Kunal, a view on some of these railway stocks as well as the fertilizer names. Would you make any bet or just stay away for now?
Well, for railway stocks, I'll stay away as of now, because after this 8 to 9 days of sharp correction, these stocks are making a bounce back. Now, this could probably be just a minor relief rally into the stock price and not be a major trend reversal, because as of now these stocks have not yet broken past about the first series of resistances for themselves. So for example, for IRFC, the resistance is around the 210 mark. The recent low for the stock was around 180 on closing basis, and the stock has now come back towards 195 odd levels, which means potentially the stock has to break past about 210 for this to be called a major reversal into the stock price, and then the stock looking ripe for a fresh breakout as well as a breakout of the previous highs. So as of now, would stay away from that. But from the fertilizer pack, Coromandel is something which is looking attractive. In fact, the stock went into a time-wise consolidation over the last 1 to 2 weeks, trying to break past about the 1600, 1650 major resistances in terms of the consolidation band. So I would probably believe that this could be a breakout for Coromandel, and the stock looks attractive for another 50 to 70 points on the upside.
Right. Okay, another interesting data that our research team has culled out in terms of how ownership trends have moved in the second quarter of 2024. While FPI ownership remains at 12-year low, institutions have added positions in technology and turned overweight in the first quarter. Let me take it across to Sharad. He's been mapping those trends and he joins in with the insights. Sharad?
Well, yes, interesting divergent trends coming, especially for the domestic ownership. If you look at it, that's coming in at a fresh high levels of almost 28.3%. And also the FPI ownership, if you look at it, it remains at a 12-year low of almost 23.5%. Now, the institutions have added positions in tech as well. But overall, how the changes in ownership has happened, and as per Morgan Stanley's report, especially the FPIs, if you look at it, there has been sequential decline as well as a year-on-year basis decline. And on the other hand, for the domestic mutual fund, it's the story is different. Almost 48 basis points rise sequentially, while on a year-on-year basis, it's 127 basis points. But look at the Indian public, these numbers also sequentially and year-on-year basis, there is a decline. But if you look at since December 2014, that's where the participation has actually increased almost 129 basis points when it comes to the changes in the ownership. But the question remains is which are the stocks which have been most bought in the quarter gone by. And of course, if you look at it, FPIs have made the biggest purchases when it comes to Vodafone Idea. For the promoters overall, it has been Ambuja Cement, Domestic Mutual Fund, the name is Indus Star, while for the Indian public retail interest, it is Z Enterprises. We spoke about the purchases, but the sales is also there in focus. If you look at it, FPIs have actually sold. If you look at the number that is coming in is Kotak Mahindra Bank. Promoters, it's Vodafone Idea, Domestic Mutual Fund, Z Enterprise comes to the list. And lastly, Indian public, the retail has been selling the highest when it comes to the total quantum, that is Ashok Leland. Also, Morgan Stanley's view, how it stands totally. If you look at it, financials, consumer industrials, technology, these are the three sectors where they are overweight, while for the other sectors, they are completely underweight.
Thanks so much for that. That's the interesting data that Morgan Stanley has also been talking about. But in the meantime, for the market, it continues to be more of the same. We haven't seen a major recovery from the day's lowest point. In fact, we're just around that level for the Nifty, mildly in the green right now. But within the broader universe, you of course have the railway stocks doing quite well. You have names like CAMS and Adani Wilmar, KNR Construction, Gujarat Pipavav. These are some of the names which are actually doing well. Deepak, what's the view on the entire, telecom and hospitality sector? Because there were reports doing around that perhaps Airtel has taken another hike, but my colleague Somit is telling us that's not the case because it just took a price hike. Do you think there is a case for any more within the telecom sector? And what's the view on hospitality right now?
Telecom, Anisha, I think has a interesting. Of course, there's just three players left now for the meeting for the most part, and Vodafone, while being one of the largest players out there earlier, has been losing market share consistently, and even with these new fundraisers that they have been doing and all that, they haven't been able to meaningfully reinvest in the business to be able to at least even retain their current market share. So I think the spoils seem to be going to the top two, and we have ownership in them, so very biased. But I think we'll see more of this pan out towards the top players, and they will make they have been able to raise rates without a meaningful pushback from customers. So I think part of this will mean that they will probably experiment with more price hikes, perhaps later in the year or next year, in order to figure out what the right price point is eventually. On hospitality, we're long the hotel industry. We should have been probably long airlines, but honestly, a miss there. But it's been an incredible time for even the summer. I think the results are going to come out quite positive, because I think more Indians are taking ownership or participating in some of the luxury hotels, many of whose brands are listed. So you're going to see a very interesting result, I feel, going forward, especially where you have a lot of demand coming in from urban households willing to travel within India, willing to travel to high-end luxury, and room rates have actually gone up without too much of a murmur. So for the first time in a long time, you have some kind of pricing power coming to the owners of the hotels. So in that context, of course, I'm bullish, and I have some positions here. But I think, I think there's going to be more to come. Capacity is still about 2 or 3 years more away before there can be fresh capacity that will take prices down.
Absolutely. Deepak, good to have you on the show. Thanks as always for taking the time out. Kunal, let me come to you quickly and get in some BTST trades.
We'll suggest a buy on M&M, the stock breaking out of that 2900 mark. So would look out for targets in the range of 3000 and stop loss at 2870. And Coal India is apparently something which is coming up on the radar in terms of indicators where there is a lot of strength. The stock is consolidating, but expecting a breakout pretty soon for Coal India. Buy with a target of 535, stop loss at 500.
Okay, let me hand it over to Snehi now and get a summary of how the closing trades have panned out today.
Well, absolutely. So it's been an eventful day on the street today. We had quite the start. Nifty managed to reach as high as 24,999.7, but missed touching that 25,000 mark on the benchmark index. There you have it, 24,843 is where the Nifty is about to close at. Taking a look at Nifty Bank, also flat moves coming in from Nifty Bank. You have Sensex also coming in rather flat, but when you take a look at the broader markets in Nifty mid cap and small cap, those two have outperformed the benchmark indices. Both of those indices up by 1% each. Let's take a look at the sectoral moves today, and PSU banks, your top winners today, followed by media, realty, you have auto, energy, pharma, metal. All of them have ended the day in the green. On the flip side, you have Nifty IT and FMCG. Both of these counters have ended the day in the red. Let's take a look at the individual winners. Then from the realty pack, you had DLF, Phoenix, Prestige, Brigade, all of them holding the Nifty realty pack up smartly. From the auto pack, Ashok Leyland, Bharat Forge, M&M, Maruti, all of them did pretty well. Pharma also holding up very smartly. Metals also holding in the green. On the flip side, when you take a look at what Nifty IT was up to, Emphasis, TechM, Coforge, LTT and Infosys, all of them deep shades of red coming in. And even on the FMCG front, you had ITC and Tata Consumers is the one to watch out for, coming out with its Q1 numbers tomorrow, but trading with a cut of almost 1% before its numbers today. One space to watch out for, in fact, two spaces to watch out for today was the railway and the shipping stocks, because both of these stocks were up and away. You had RITES, Mascot, Rail Vikas, Ercon International, all of these stocks flying away in today's trade anywhere between 9 and 15%. So very stellar moves coming in on this front. On the flip side, you had Lakshmi Organics, Equitas, CSB, Latent View. Big cuts coming in on this side. But well, yes, that sums up the market action for today. Nifty 50 closing very close to that 24,840 mark at 842 is where Nifty 50 has shut off for the day. As high as 24,999, but well, receded all the way back, and the 24,842 is where we shut off for the day.